Hello everyone, hope you're doing well. Karthik sir here. Let's start with the next area in relation to conduct of audit of banks. Okay. Now the entire chart covers the conduct of audit of banks in a very organized manner. So you have to just ensure that you're following the numbers that I've already given. And I'll tell you which are more important and which are less important. Okay. The chances of this answer coming together as a single whole answer is very less because I don't think ICI will have that much quota of marks to give if they ask the entire answer. But what you can expect an answer on is, sir, suppose if a specific question is asked, then we should know about that part. So here I am going to tell you in relation to how to go about every single part here and ensure that how much importance you have to give, that you should be very clear about. Okay. Everyone, please see here and understand. You can see the numberings which I've given there. It goes from section number one, not section number. Sorry, I'm going to the law mode. So one and in the top left corner and below you will see there in the center below region of the screen you will see there 18, correct? So it goes till 18. Okay. Now out of these which are very important and which you can just go through it and you can just simply understand what that concept is and read through later. But what are the most important ones? I'll just mark it for you. Number one, very important. Number 5, very important. Number 6A and 6B, both important. Here 9 is important. Here you have then 18, which is important. Other areas you have to read through. I'll explain it also, but you have to read through it properly. Okay, they can ask in MCQs. But 1, 5, 6A, 6B, 9, and 18, you have to do it properly, as if a separate question can be asked in the examination. From that perspective, you have to do it. Okay. Now let's start with this area. Let's start with the first area. Now we are doing conduct of audit of banks. So the first thing starts with initial consideration. So what will the auditor do before he starts the audit of banks? So what will the auditor do before he starts the audit of banks? He will do initial consideration. What all will he think about? Okay. So they are given some matters here that the auditor has to think about. First is in cross. What is in cross? First is auditor should not be indebted to the bank. हमने वो बैंक से लोन नहीं लेना चाहिए. We should not have taken any kind of loan from that bank. So auditor should not be indebted to that bank. That is the first point here. Okay. Next, they have said here, auditor should not be doing any kind of internal assignments with the bank in the same year in which he is doing the statutory audit. So if the auditor is doing statutory audit in that same year, he should not be associated with any internal assignments of the bank. Example, the auditor is involved in, or his CA firm is involved in giving some financial advice to the bank. That they cannot, because they are then getting involved with the management or the financial advisory area with the bank, that they are not allowed to because they are the statutory auditors. So if you're the statutory auditor in that same year, same financial year, you cannot be giving, you cannot be associated in any internal assignments with the bank. Okay. So tell me the two ins with the cross. First is no indebtedness from the bank. So there should be no loan that the person, that the auditor should take from the bank. Second is there should be no internal assignments association with the bank. So in the year in which you are doing statutory audit, you should not be doing any kind of internal assignments with the bank. Okay. Third, they have said here, and I'm just going to write here a word called plan. Sorry for that. Plan. When the auditor is planning the audit, what they are saying is he has to take into consideration 210 and 220. 210 is agreeing the terms of the audit engagement, and 220 is in relation to quality control. So the auditor has to plan properly regarding 210 and 220 matters. 210, as I told you, is agreeing the terms of the audit engagement. How should we get into the agreement with the client? What should be the procedure for that? That auditor should plan. Second, 220. In 220, we had done that farmer story. Remember the village farmer story. So in that thing we saw, sir, first is the turban. You remember that is your leadership responsibilities. Then the tilak ethical requirements. Mukesh Ambani ke saath shake hand. That is called acceptance and continuance of client relationship. Then you have the human resources. Your Tinku will come. The small boy will come. He will climb the tree, pluck the mango, get it back. That is basically called engagement performance. And finally we'll do monitoring. That is what we saw. Correct? No, that is what we saw. So in that, no, in this first initial consideration, you're looking at accepting the client relationship. So when you write 220 here, we have to plan in relation to accepting the client relationship, whether we should accept the relation or not. That is what we are deciding in at this stage. So tell me, Auditor will plan regarding two things, that is agreeing the terms of the audit engagement, that is SA 210, and SA 220, that is in relation to quality control, and in that specifically accepting the relation with the client. Okay. Then you have, of course, 520, 510, sorry. 510 is in relation to your opening balances, that is initial audit engagement, opening balances. Because we are going to do the audit of the bank for the first time, we have to, of course, check the opening balances, correct? Whether closing balance has been correctly brought forward as the opening balance, and entire that 510 area, we have to check that, okay? Then we have this C. Clause 8. C8 means clause 8 of part 1 of the first schedule. Clause 8 of the part 1 of the first schedule. Now, what does this say? This says that, see, this is of your CA Act 1949, which we'll be learning in CA final. This is from Code of Ethics. So, Clause 8, Part 1 of the first schedule of the CA Act 1949 says that whenever you take any auditing assignment, you should first communicate with the previous auditor. That, see, you have been appointed as a new auditor and you should take any advice or suggestions from him. Example, if I am going to be appointed as the auditor, I should first communicate with the previous auditor and tell them that, see, they are offering me to be the auditor. What was your experience like? And if that other person says that, see, no, the client is good, we had some what do you call difference of opinion, and that is why we decided to discontinue. Otherwise, the client is good; they are paying all the fees on time, no problem. Then you can accept the work because there is no such big issue with the client. But if the previous auditor says that this client has not paid me the fees in the last 2 years, not paying me the fees only, always telling we'll pay later, later. They have the money in the reserves, they have the money, but they are not paying only. So you understand, in that case, we should also be very careful before taking the audit work. So that's why they always say in the Code of Ethics also, they have said in clause 8, part 1 of the first schedule, that before a CA takes the work of the client for auditing, he should first communicate with the previous auditor, the predecessor auditor, and ask them regarding their experience with the client. That is what is clause 8, part 1 of the first schedule. Next is the auditor should look at the risks, risk of taking the work. Regarding risk, no, I am just going to put an arrow from there to here. When we do this R point, I'll tell you more about the risk. Okay, so wait for it. Let this arrow be there so that it is easy for you to connect. So first, the auditor should look at the risk of the engagement. Let's see, we'll see the risk, what all risks are there. So mainly, how will you come to know the risk at the beginning? You will try to gain the risk by understanding the entity and its environment, correct? You will try to do the RE offense, as you know very well, that is AFRF, regulatory and industry factors, objectives and strategies, financial performance, nature of the entity, selection and application of accounting policies. You will try to do that, correct? So you will look at the risk. You will check the team. You will see which people you want to take for audit work. And finally, what you will do, as I told you, is you will understand the entity and its environment to know the risk. So your RITU is nothing but in relation to understanding, doing the risk assessment, ensuring that your which team members you're going to take, that is team, that is the people should be qualified, they should have the required abilities and skills to do the audit work. We are doing audit of banks, so you should have some bank audit experts or personals with you, so that your audit work goes on properly, because then they will be having more experience and they'll be guiding you in a proper way. And finally, you should understand the entity and its environment. Okay. So tell me, what are the initial considerations that the person will keep in mind, that the auditor should keep in mind before starting the audit work of the client? First is we should check we should not be indebted to the bank, that is a client. Second, in the year in which we are doing the statutory audit, we should not be having any internal assignments with the bank. In the same financial year, we should not be having internal assignments and statutory audit both work. If we are statutory auditors, we cannot take internal assignments. If we are doing internal assignments, we should not take up the statutory audit work in the same financial year. Next is we should plan in relation to two things. Agreeing the terms of the audit engagement. So the agreement and all we should plan regarding how it will be made. And second is we have to get into SA 220. That is nothing but your quality control. In that specifically accepting the client's relationship. After that, you had 510. That is, we have to check the initial audit engagement. That is, opening balances we should check. And 811 is clause 8 of part 1 of the first schedule. That is, we should communicate with the previous auditor before accepting the audit work. Finally, Ritu is what? Risk we should check. We should check who will be in our team members, and understanding the entity and its environment. As simple as that. That is basically your initial consideration. Initial consideration. Okay. Now, after this, no, we'll be reading point number 2, 3, 4. So point number 1 is done. Point number 2, 3, 4, we'll be reading it through. So let's do one thing. Let's go to the main area where the content is there. And 1, 2, 3, 4, let's do it. We'll again come back for fifth one here in the diagram. Okay. So please come to 1, 2, 3, 4 here. See this. Keep marking it here so that it is easy for you to understand. Please see here. Initial consideration they are given by the statutory auditor. First, please underline that. Declaration of indebtedness. The declaration of indebtedness. The RBI has advised that the banks, before appointing their statutory central circle branch auditors, should obtain a declaration of indebtedness. Okay. Next is internal assignments in the bank by statutory auditors. The RBI decided that the audit firms should not undertake statutory audit assignments while they are associated with internal assignments in the bank during the same year. Underline the important key area, same year, in the same financial year. Next is planning. Standard on SA 300, that is planning and audit of financial statement, requires that the auditor shall undertake the following activities prior to starting initial audit. Prior to starting initial audit, what work have they given? They are given here first. SA 220, that is quality control for audit work regarding the acceptance of the client relationship and specific audit engagements, and establish understanding of terms of engagement as per SA 210, agreeing the terms of the audit engagement. So these are the two things that they're given here, that is 210 and 220. You will plan regarding that. So main point is in relation to planning. As I told you, plan regarding 220 and 210. Next is communicating with the previous auditor. As I told you, clause 8 of part 1 of the first schedule to the Chartered Accountant Act 1949. The Chartered Accountant in practice cannot accept the position as auditor previously held by another Chartered Accountant without first communicating with him in writing. So the CA is going to take up the audit work, has to first communicate in writing. Okay. Terms of audit engagement, I said 210, terms of the audit engagement. They have again given 210 point. They have just said here. They requires that each period to be audited, the auditor should agree on the terms of the audit engagement. Basically, there should be proper contract in place. This 210 point is again repeated. It was already there covered in planning part. Next is initial engagements. The auditor needs to perform the audit procedures as mentioned in SA 510. Initial audit engagements, opening balances. Auditor should do the opening balance checking. Next is auditor should check the risk. He should have a team in place and he should understand the bank and its environment. In that, just in risk, underline their critical part of the audit process. You have to know the risk, right? Only then you will be able to decide how to go about the audit work. Second, in team, underline the word qualified and experienced professionals should be there in your team. Okay, and you will look at the bank's size, nature, and complexity of the bank's operation, and only then you will take the team members. Okay, and Indian cricket team captain first will look at the pitch, look at the weather condition, and then he will decide which players to play, whether to take a spinner or whether to take a fast bowler in the, whether to take an extra spinner in the team or fast bowler in the team. Similarly, the auditor will look at the client and decide, okay, if the bank is a pretty complicated, big bank is there. So in that case, let me do one thing. Let me take some more experienced bank audit persons in my team. Simple. Understanding entity and its environment, you know very well. SA 315, the name is identifying and assessing the risk of material misstatement through understanding the entity and its environment. So auditor should understand the entity and its environment. And you know this very well, and that is your offense. Comfortable? Okay. That is basically the first one. Now we enter the second answer, that is in relation to this small. Now look at this small areas are there. Just understand and keep an understanding going with you. Okay, see here. Just keep in mind that in MCQs you should be prepared for it. Okay. You can look at the size of point number 2, point number 3. Now these points will not come in the exam for 4 marks or something. Okay. So you have to just keep in mind from MCQ angle. Okay. So see this. Identifying and assessing the risk of material misstatement 315. They have said here. We have to check the risk of material misstatement at 2 levels, which you know very well. FS level, which is more pervasive, and assertion level, which is for, as you can see here, transaction, account balances, disclosures. My dear students, you know this by the name TAD, transactions, account balances, disclosures, correct? And based on that, you will decide your further audit procedures. Further audit procedures. Comfortable? Okay. Then understanding the bank and its environment, including the internal control. So they have said here, auditor should understand and identify the risk. He should make an audit plan and to determine the operating effectiveness of the controls and to address the specific risk that he sees. So he should identify and address the risk, make an audit plan so that he is catering to those specific risks in relation to his audit work. Okay. Then the fourth one is understanding the bank's accounting process. Okay, I think in the class I've said many times that most of the banks in India use the software made by Infosys, and that is called Finacle Core. Okay, so accounting process means you're checking the software whether that is working properly. So what are you checking in that? See, you're checking accounting process produces financial and operational information for banks for management's use. It also contributes to the bank's internal control. So you should identify and assess any risk or material misstatement in relation to that. And of course, if you find any, then you have to perform what? Further audit procedures. When the line goes up 315, you will do what? 330. That is your response to risk. That is your further audit procedures. Comfortable to understand this? Okay. Now we go to the next area, that is in relation to your point number 5. So come back to the base diagram, and this is your point number 5. Let's see this. Now look here, see. We are now doing something called a risk management process. Now in risk management process, they have set simple matters, very easy. First is what? Who ensures that the risk management process should be there in place? In any organization, who does that? The TCWG or the top management, correct? So TCWG from the top, let's say the TCWG is sitting here at the top of the company, then they will have a complete oversight. Oversight means they will have a complete view like this. They'll have a complete view from the top, complete view from the top, correct? Regarding what risks are there and how it has to be controlled, correct? That is what TCWG will should have an oversight on the entity. Now, when they have an oversight, they may see the risk, they may identify the risk, measure the risk, monitor the risk. We'll say it again. Identify the risk, measure the risk, monitor the risk. Okay. So TCWG has an oversight. They should ideally identify the risk, measure the risk, monitor the risk. And then they must have put some controls in place. So that is your controls. Controls should be there in place. So I always say the control is at this level and the risk is here. We say that the control risk is less. But if the risk is higher and the control is weaker, then the control risk is more. TCL should decide the first thing or the second thing. The second thing, that the control should be better so that the risk is in control. So control risk will be less. So you understand that we are doing three things. TCL will have the oversight. In that, they will identify the risk, assess, monitor, measure the risk, and monitor the risk. And finally, we will have the controls in place. Now, whether these controls are working properly or not, that has to be checked at regular intervals. That is called as monitoring activities. Monitoring activities. And finally, in today's times, most of the systems that are there in the bank are automated. So you should have a reliable information system in place. And if you have a reliable information system in place, most of your financial issues are at least resolved, or at least the controls are there in place. Correct? Example: when a loan is given, and if it is entered in the system, then at least the financial aspect or the recording matter is taken care by the system itself. That is the automated system itself. Correct? So you understand whether reliable information system is being used by the bank or not. That is what we are checking here. Okay. So let's go for it. Tell me first is what your risk management process. In that a TCW should have an oversight. Oversight. They should have a broad view. In that they will be identifying the risk, measuring the risk, monitoring the risk. They'll also must have put controls in place. What are these controls? We'll see in depth. Wait for it. Next is we'll see whether these activities are carried out on a regular basis. That is called monitoring the activities. One time if you set up and then forget about it, then that is not going to work in the future. You have to keep on monitoring it whether any improvements are required. Next is the information system should be reliable. Reliable information system should be there. That is basically this risk management process. Easy to understand this area. Okay. Now let's get into point number 5 here, and let's read this first. Then I'll take you to 6A and 6B. Everyone, please come to point number 5. Please see here. That is understanding the risk management process. Management develops controls and uses performance indicators to aid in managing key business and financial risk. An effective risk management system in a bank generally requires the following. First, they have said here oversight and involvement in the control process by those charged with governance. Those charged with governance, that is the board of directors or CEO, chief executive officer, should approve a written risk management policy. They should have a risk management policy in place. If they have a policy in place because they are having oversight, they will have a policy in place because if they have a policy in place, what will they be able to do? They'll be able to identify the risk, measure the risk, monitor the risk, correct? Risks that could significantly impact the achievement of the bank's goal should be identified, measured, monitored against pre-approved limits and criteria. Pre-approved limits and criteria. Example: a person comes to take a business loan. Now, can you blindly give him a business loan, or should we ask for some policy? Should we ask for some policy only? Correct. So you have to identify, measure, and monitor the risk, and then set your policies in place. After that, you have the next area, that is, you will control the activities. Now, this has some content. So I've written here. See, remember the content. Now, understand few things here. Controlling the activities basically means to avoid any kind of big issues to happen in the bank. Now, the first thing they have given is segregation of duties, SOD, segregation of duties we should do. Segregation of duty, I always keep telling, segregation of duty, if you do, then the only way fraud is possible is when they come together and do the fraud. When the employees come together and do the fraud, only then the fraud is possible. That is called collusion. But doing collusion itself is a very difficult task. Then let's say there's a process divided into some 7 parts, and there are 7 employees who are taking care of it at different stages. All these 7 have to come together and do the fraud. Only then the fraud will be successful. That is when they collude together. So you understand, very very difficult for seven employees to come together and do the fraud. Very difficult to for them to have the trust in each other. For none of them to go and tell the main boss that see this fraud is happening. All of them should have insane level of trust. So you understand segregation of duties is one of the effective ways to control the fraud issues in any big banks. So that the auditor will see whether that is in place or not. Second is reporting on positions. See, accurate measurement and reporting on of positions. That can be in relation to the loan positions. Okay, the loans that the bank has given, whether how much of the loan is turning into NPAs, how much of the loan is being paid on time, how much of the loans has come for renewal purpose or extension purpose. For all those things, the auditor will check. We'll check the verification approval of transaction. Whenever a person comes to do any transaction with the bank, example, to ask for a loan, then what are the approvals that the person requires? Okay, the person comes to ask for a loan of 2.5 crores. Does the bank give the approval blindly, or are there any procedures in place? That is what the auditor will check, controls in place. Next is reconciliation of position, the same thing, whether the reporting that the bank is doing, whether that is proper or not, whether whatever the bank is showing in terms of, oh, this is our NPAs, whether that is the truth or not, or are there more NPAs and the bank is hiding and showing lesser NPAs to show a better position in their accounts. That is what the auditor is checking. Next, they have written here setting of limits. This is your drawing power limit, your sanction limit, that limit here, basically. Next is reporting and approval of exceptions. What is exceptions? Anything that is not written in your SOP, standard operating procedure, regarding which the juniors are seeking the help of the seniors. How are those matters solved? Example, there is a unique situation that comes in. So in that case, how is that matter solved? That is basically this approval of exceptions. Okay. Next is your physical security. What kind of physical security do we have in the bank? Example, outside the main locker area, you have appointed a person to just see whether nobody, there is a proper security guard in place. That is a physical security. Bank, whenever it is not working, on Saturday, Sunday, there is a proper locking system in place. There's an alarm system in place. There is CCTV cameras put across the bank, inside the bank everywhere, or where the entrance is, there probably CCTV camera is capturing everything. CCTV camera is working also properly. That is physical security, correct? Last is underline here contingency planning. If any untoward incident happens, example in relation to any robbery in the bank. So in that case, how are they going to deal with that matter? Terrorist enter the bank and take the people in the bank as hostage, employees as hostage, or the people who are visiting the bank as hostage. Then in that case, how are you going to solve the situation? Can be an issue. That is called contingency planning. In your worst come worst scenario, what has the bank in place? That is called as a contingency planning. Simple, easy to understand this area. That is basically your control activities. Next, monitoring the activities. Auditor should check whether risk management models, methodologies, assumptions used to measure and manage the risk should be regularly assessed and updated, whether they are in place or not, assessed and updated. This function may be conducted by the independent risk management unit. So they should see whether it is properly there in place or not. Okay. Next is reliable information system. What have they given here? See this. The bank should have adequate financial, operational, and compliance information so that the information is given on a timely and consistent basis. So the bank software should be top class. Okay, if the software is not very good, then you'll understand the bank will keep on facing a lot of issues. Comfortable. That completes of this area in relation to risk management process. That is your your five here. Okay, that is your five. So we have completed this area here, and that is your risk management process. Okay. Now the next part is in relation to engagement team. Now let's see this area. The very simple area. First is about how the engagement team should function and what matters they should discuss. There are two parts to this. You can see here matters discussed is 6B, second part, and how the engagement team should function. That is your 6A part of it. I'll teach you 6A, 6B both, and then we'll read it together. So everyone please see here. See, the more experienced people in any team, you take a cricket team, football team, or a bank audit team, okay, no, any team, they'll of course share their knowledge. They will share their insights. The word given in the module is called insights. Insights means they'll give their point of view. They'll give their experience. They will reveal about any past frauds that they have caught. They may reveal about any previous issues that were there in the other audit that they have done in their career. So you understand they will share their knowledge and insights. Okay. The younger team members, whenever they find any risk, if they don't know what to do with it, what they'll do, of course, they will exchange information on the risk with the seniors. So seniors will share their knowledge, insights, motivation can be there in this part. And the lower level team members, whenever they are doing the audit, they'll exchange the information on the risk with the senior members. And between them, there should be a very good understanding. The lower team members and the higher team members in the audit team should have a excellent understanding between them. Okay, so first of all is they will share their knowledge, they will share their insights. Second is the lower team members will exchange the information on the and any risk that they have seen, and they should have an excellent understanding between them. That is how the team should function. Okay. Now, what matters will they discuss? So they have given here. See, first is the code here which I have given is FREPA. First is F. F will say fraud. F is what? Fraud. Okay. So any fraudulent issue that is there, then they should discuss that matter. Don't you think a team, audit team should discuss the fraud matter? Of course they will discuss. Correct. Next is in relation to this R. With R, no, I'm putting three arrows here. And I'll just say what these three arrows are because there is no space to write. I'll give you the markings later. First is called engagement risk. Engagement risk. Second is called pervasive risk, and third is called specific risk. Remember EPS. E engagement risk, P pervasive risk, S specific risk. EPS. So I can at least write EPS here. 1 minute wait. EPS. What is engagement risk now? Engagement risk is a risk that because the auditor will now work for a particular client, there is a risk that the auditor's goodwill may fall down. When you are working with a client which has a fraudulent history, then in that case, the auditor may fear that maybe his own goodwill may fall down. In that case, the auditor has to be very, very careful. That is called engagement risk. When you are associated with a particular client, does it lead to a risk to the auditor's own work? That is called engagement risk. Example. I'll give you an example which you will understand from a legal angle, from a lawyer angle. Let's say a lawyer is there in the court and he is defending a criminal. So lawyer is doing his work. So in the court, the criminal has the right to appoint a lawyer. He approached a lawyer, and the lawyer is just defending the criminal. But just because the lawyer is defending the criminal, don't you think the lawyer's name will also be tainted in some way that, oh, this person just, fights a case for criminals and all? The answer is yes. So that is the risk that the lawyer is taking. Similarly, what they're saying is if there is a issue regarding a client and a client has a history of doing fraudulent activities, and the auditor is getting associated with this client, in that case there is a certain amount of engagement risk that will be there. Okay, that is engagement risk. P is called pervasive risk. Pervasive risk you know very well. That is a risk that cannot be pinpointed. That we feel that the risk is there everywhere. Now, when you as an auditor, when you go and do the audit, when you feel risk is there everywhere, that is called pervasive risk. As I keep saying in the class, problem is there everywhere. It is not confined to any specific account, item, element of in relation to your data. It is in relation to the client's character, client's ethics, client's values. You feel problem is there everywhere. That is basically this pervasive risk. What do you mean by specific risk here? Specific risk basically means that there is a pinpointable risk. Example, you can pinpoint at debtors and say that debtors are overstated by 2 crores. You can pinpoint at creditors and say that they are understated by 2 crores. You can able to pinpoint. That is called your specific risk, or we say risk at the assertion level. But these specific risks, if they are not taken care, then we will see that because the transactions are recorded in an information system, there can be many such transactions and there can be a repetitive default in nature. So here, the way you will write the point is specific risks which may lead to a pervasive matter in the future, which may lead to pervasive matter in the future. Okay. So you have three type of risk here. That is your engagement risks, pervasive risks, and specific risk. Specific risk. Okay. E is errors. Auditor will be discussing that within the team. They will be discussing what errors they have already done in the past, which should not happen in the current audit. Correct? They will discuss that matter. Suppose a team has a habit of doing errors of a similar type. Then the boss will say, or the main audit manager will say, boss, see, we have been doing a lot of these errors since in the past. Let's not repeat these errors. That is, errors of the past should not be repeated. Next, errors in relation to future should not be repeated. Errors in relation to future means errors that may happen in the future. That should not be done. That should not be done. Not repeated, sorry. That should not be done. That should not happen. So this is the auditor showing some kind of a foresight, saying that these errors should not happen in the future. Okay. So we'll say errors of the past and errors in the future. Next is professional skepticism. Your favorite thing, correct? Quack. Questioning mind, alert to conditions, critical assessment of the audit evidence. Auditor should have attitude of professional skepticism. And if the auditor becomes aware of any issue, he should make other people also aware about it. So if the auditor is having professional skepticism and if he finds something, he should make other team members also aware about this matter. Aware about this matter. Now that is called FREPA. So the matters that we'll discuss is FREPA. Fraud, risk of three parts. That is your engagement risk, pervasive risk, specific risk. E is errors, errors that has already happened in the past which should not be repeated, errors that may happen in the future. Then after that you have P, that is attitude of professional skepticism, and A, if the auditor comes to know, if the team member comes to know about some issue, they should make others also aware about it. Simple. That is your 6A and 6B. 6A and 6B. Let's read it once. Let's just see here. Okay, everyone. Please see here. What is 6A, 6B? Very simple area. See. Engagement team discussions. The engagement team should hold discussions to gain better understanding of the bank and its environment, including internal control, and assess the potential of material misstatements of the financial statements. All these discussions should be online there, appropriately documented for future reference. So everything should be there in the audit documentation. From appropriately documented, you can put an arrow and write there SA 230. That is auditor's own notes, correct notes should be properly documented. The discussion provides an opportunity for more experienced engagement team members, including the audit engagement partner, to share their insights based on their knowledge of the bank and its environment. So the more experienced persons in the team will share their insights and knowledge. An opportunity for engagement team members to exchange information about the bank's business risk. So the team members who are there, they should exchange the risk when they find any risk. They should exchange with the members who are more experienced. And understanding among the engagement team members about the effect and the results of risk assessment procedures on other aspects of the audit, including decisions about the nature, timing, and extent of the further audit procedures. Only when they discuss, they'll come to know about the risk, and only when they come to know about the risk, they'll decide the response to this. That is your further audit procedures. That is nothing but your SA 330. Identifying and assessing the risk is SA 315, and when you respond to the risk or do further audit procedures based on those risks is called SA 330. Comfortable to understand this? That is your engagement team discussions. This is your 6A. Now, the engagement team discussion ordinarily includes a discussion on of the following matters. So, what are the matters that they are given here? Let's go in our code FREPA. So, just keep the marking here. So, this is your first point. Fraud. Matters by which fraud might be perpetrated. Perpetrated means done by the bank personnel or others within a particular account balance and or disclosures. So, auditor may discuss that fraud matters. Audit responses to your risk, that is your engagement risk, pervasive risk, specific risk, that they'll discuss and give the response. So your R is your risks. Then with E you had 2 points, that is your errors that may more likely to occur. In bracket you can write their future, and next is errors which may have been identified in the prior years, that is your past. So that is your 3 will be here and 4 is here. Comfortable? Then they need to maintain professional skepticism throughout the audit engagement, that is questioning mind, alert to situations, critical assessment of audit evidence, quack. Next to professional skepticism, you can write there quack, QAC. And finally, need to alert for information or other conditions that indicates that material misstatements may have occurred. That is your point number 6. That is your point number 6. Comfortable? Easy? That is your alert for information. Comfortable? So you can write the code that called FREPA. FREPA. Easy? Okay. Let's go further. Now, what I'll do is I will 7, 8, and 9. I will take the markings here first, and then we'll go and just read it through from the chart. Everyone, please come here and do it with me. See this. What is your overall audit strategy? In chapter number 2, we had done audit strategy, correct? And in chapter number 2, when we did audit strategy, in that case, what you have to remember is whenever we establish the overall audit strategy, it will be, of course, before the audit starts, because we'll first make the strategy, then will come the planning, and then we'll start with the program of audit. Okay, audit programs will be there. So our overall audit strategy will be there. In overall audit strategy, you have to see which people you can take for audit work. If you remember that audit strategy diagram also in chapter number 2, those students are having issues in identifying which areas. I keep telling you, identification is the biggest challenge. If you solve that, your 90% I can tell work is done in audit. Okay, plus the concept. Okay, plus the concept. So what you should do is see in chapter number 2, you had chart number 2, that is in audit strategy. And if you see the first answer, that is overall audit strategy covers what all matters. In that covers matter, what was there? Overall audit strategy we see, and then we see in resources. Resources is what? Your engagement team members. Your team members, correct? No. So we are seeing here which key team members to involve, whether we have to take any kind of specialists for doing the audit. See, in audit of banks, insurance companies, all these companies, no, you need specialization. Normal auditor who does auditing of services and manufacturing entities, when he goes to do the audit of banks, the challenges are at a whole different level. It is a completely different world there. So we need some specialists who will guide us and help us doing the audit better. Okay. Next is developing the audit plan. So this is same matter. You can see here, see SA 220 is repeated, SA 210 is repeated. We have already done this earlier. See, before starting the planning and planning of an audit, the auditor must perform the procedures in 220. That is quality control. But in this quality control, there we saw in relation to quality control acceptance of the client. Correct? No, in that first answer which we did in this video itself. But in this case, they have written about see reviewing the ethical and independence requirements. Correct? So just remember this area that in this case while planning, now after taking up the audit work while planning, we'll see whether we are doing the work ethically with proper independence or not. All these things will come here. Next is asset 210, that is we should comply with the 210, that is agreeing the terms of the audit engagement, whether contract has been followed, whether the client is giving us all the information, whether we are doing our audit work as auditor. That is what the auditor is checking in this part. Okay. Next is this is what I marked as circle, which is important, called audit planning memorandum. Now see, whenever you make a plan, no, sometimes your plan can become very extensive. Sometimes when you keep on planning, your plan will become so extensive. Then now you need a summarization of the plan. Now this summarization of the plan is called as audit planning memorandum. C. The auditor should summarize their audit plan by preparing an audit planning memorandum. Now, in this, what will they cover? They will cover the work that they have to do, scope and extent of the audit procedures, scope and extent of the audit procedures. They will cover the risks that they have identified, the issues that they have identified. They'll cover that, issues that they have identified. They will see regarding these issues, are the controls reliable? Are the controls reliable? So first they'll see what kind of work is that. That is your scope and extent of audit procedures. In that you're checking the significant issues and risk which you have identified, and you will see whether the client, whether the bank has proper controls in place or not. And finally, whether as auditors we are given proper response to the three risks which you know, EPS, remember, engagement risk, pervasive risk and specific risk, whether we have responded appropriately to these risks. So this will be covered in the audit planning memorandum. Why I mark this as circle, this point number 9, I'll tell you. Well, point number 9 no, is a hidden good answer that can come in the exam as a short note or a small question for 3 marks also. They'll ask, while doing the audit of bank, what will you cover in the audit planning memorandum? And then you have to write the scope and extent, significant issues and risk identified, the response to engagement risk, pervasive risk, specific risk. Simple answer. So don't miss out on that. That's why it is circled there. Okay, simple. Let's go here and just see where, at what stage we are in our diagram. So we are done with 7, we are done with 8, and we just did 9. That is strategy, plan, and memorandum. Okay. Now from 10 to 17 is pure read. Okay, pure read. We'll be reading it through. I'll guide you through it. So let's go there first. And then we'll do 18 also there itself. Then I'll bring you back to the chart. Okay. So everyone please come to 10 first. That is materiality. Now let's go to this part. Everyone do the marking with me. See materiality first. So materiality, what they have said. See, while doing the audit, of course, the auditor has to set the materiality benchmark depending on the risk. The auditor should consider the relationship between audit materiality and audit risk when conducting an audit. The determination of audit materiality is a matter of what professional judgment and depends upon the knowledge of the bank, assessment of the engagement risk, and the reporting requirements for the financial statements. So auditor should determine the materiality. As simple as that. Going concern, we'll check whether the bank is going to continue as a going concern. So auditor will see, are there any events or conditions which may cause a significant doubt on the bank's ability to continue as a going concern? जीने के है 4 दिन, this song we had sung correct no in the class, the same thing, events or conditions that may cause a significant doubt on the bank's ability to continue as a going concern. Auditor will check that. Okay. Next, fraud, your favorite area. Okay, all time favorite area is fraud. Correct. Assess the risk of fraud including money laundering. Now what they have given here is, see, auditor should do the audit keeping in mind, as you know very well, that is your SA 240. SA 240. The auditor responsible relating to fraud in an audit of financial statements. We should identify and assess the risk of material misstatement which can be due to fraud. The auditor has to respond appropriately if he finds such matters. He should do the necessary steps. He should work more. He should see more areas are getting affected or not. All these things he has to do. Of course, he has to maintain an attitude of professional skepticism, correct? Questioning mind, alert to condition, critical assessment of audit evidence. Next, the auditor should ensure that the RBI guidelines in relation to prevention of money laundering and know your customer KYC norms, whether they have been followed or not, and whether the bank has, see it, what does the RBI guideline say? It requires banks to establish policy, procedures, and controls to deter, means to stop, and to recognize and report money laundering activities. Any issue in relation to money laundering activities, whether that is being reported properly or not. That is what the auditor is checking. Simple, whether the bank is following that or not. Next is in relation to specific risk. I told you any risk that can be pinpointed to specific risk, but which can lead eventually to a pervasive risk. Suppose in a computer system you find one error. Normally the computer runs in a process, correct? There's a process in place. So if there is a single error, very unlikely that that is the only error. Very likely that there will be more errors. Very unlikely that it is the only error, and it is very much possible, very likely that there can be more errors like that, because the system will process the transaction the same way. So you are seeing here, see, we have to identify and assess the risk of a material misstatement at the finance statement level, which refers to the risk that relate pervasively to the finance statement as a whole and potentially affect what? Underline, there are many assertions. Many assertions. So auditor should assess these. Next is risk associated with outsourcing of activities. If the bank has given some work to an outside party, whether there's any risk in relation to that. Okay, suppose by chance the customer details should not be, or the bank's clients or people who have the bank account, their personal details should not be shared by mistake. That is basically what they are saying is, see, bank can make use of services of an expert not available internally. Only then you will go outside for support. There are, however, a number of risks associated with outsourcing, especially information sharing. And it is important to effectively manage those risks. So information which is confidential, example, a person's name, address, all these details, a bank account number, there are other details, should not be disclosed very openly, correct? Next is response to the assessed risk. SA 330. Auditor responses to the assessed risk requires the auditor to design and implement overall responses and to address the assessed risk. That is nothing but your further audit procedures. They have written the same thing. See, design and perform further audit procedures whose nature, timing, and extent are based on and are responsive to the assessed risk or material misstatement at the assertion level. That is the response to the assessed risk. Comfortable? Okay. Next, they have given something called, as a nice point called stress testing. Now, what is stress testing? RBI has told the bank that see your limit up to which you can handle the bank's duties, bank's work. At a point in time, how many people can access the bank's app? There has to be some limit, because if too many people are accessing that, then the server may go down. Your ICI result day, the ICI website sometimes goes down, correct? So tell me, what is going wrong? Does the site not like to work on that day? The answer is not like that. The answer is that there is too much traffic. Because there is too much traffic, the site is not able to cater to everybody's needs. So you understand here, the RBI has asked the bank in the same way, check your stress test. Do your stress test and check your upper limit level. And this all banks have to do. So see this, RBI has required that all commercial banks that shall put in place a board approved stress testing framework to suit their individual requirements, which would integrate into their risk management systems. Comfortable till here? Okay. Next is a very nice point called Basel 3 framework. Now I'll give you a little history about this. You know what is Basel? Basel is a place in Switzerland where Roger Federer is born. Okay, Roger Federer, the tennis superstar, he was born there in Basel. Sir, but how is that connected to banking? So I'll tell you. Roger Federer is not connected to banking. That I just gave you an information. But understand this. See, Basel 3 is what? Basel 3 framework. In 2008, in 2008, there was a big crisis that happened in USA, where what happened is the banks were giving the loans to people without checking their background. Means whenever I'm giving the loan, I'm not even checking whether that person has the ability to pay the loan amount or not. I'm just blindly giving the loan. Now, when I do that, what happens is that person takes the loan for granted, and that person gives any security to the bank in the hope that one day he'll be able to pay the loan. So what happened is many people, they went to the bank. Many people, they went to the bank and they took the loan from the bank. This is the bank, and they took the loan from the bank and they mortgaged their house. So what happened is, when all these, and there were millions of people, and when they did not pay the loan amount, what happened is bank went and took over their house. Correct? Because the bank had given the loan and these people defaulted on that loan. So the bank took over their house. So many people came on the street directly. They were homeless, and that is called the 2008 U.S. loan crisis, or it is called subprime crisis. They've written here, see, subprime crisis. And a big issue happened. It means banks gave the loan without doing the background checking properly. And they were giving the loan hoping that, oh, everybody pays the loan only. Why will they not pay the loan? Everybody pays the loan. Like that, the bank thought, and they gave the loan. not realizing that they had given the loan to people who were on the verge of losing their job, or who were jobless, or people who were homeless earlier, or people who were showing the fake documents of their house. Like that, bank just gave the loan blindly without doing any background checking. Now, because of that, the entire system collapsed. So what happened is, after that, the banks met at a place, or the you can say the heads of the banks met at a place in Switzerland called Basel, and they came up with something called as a Basel framework. Okay. Now that Basel framework got eventually more advanced, more things got added to it, and the Basel 3 framework was formed. So auditor has to check whether Basel 3 framework is followed or not. Comfortable, and you will understand this is only for the audit of banks matter. Basel 3 framework is not applicable for any audit; it is only for audit of banks. So see this. The Basel Committee on Banking Supervision (BCBS) and the Financial Stability Board, that is FSB, has undertaken an extensive review of the regulatory framework in the wake of the subprime crisis, because of the subprime crisis in the US in 2008. In the document titled Basel III, a global regulatory framework for more resilient banks and banking systems, released by the BCBS in December 2010, it has inter alia proposed a certain minimum set of criteria for inclusion of instruments in the new definition of regulatory capital. ऐसा उन्होंने दिया है यहाँ पे. ओके. अब यहाँ पे इसके ऊपर एक मूवी आई थी. There was a movie which was made on this concept, on this matter, this issue of US 2008 loan crisis, and that movie is called The Big Short. The Big Short. This movie, is a fantastic movie, but it has a lot of financial jargons and a lot of financial terms. After your exams are over, do watch this movie. You will get to know how the matter happened and how people lost everything and how the market worked at that time. You will come to know a lot about the financial sector. So it will give you a big insight on that also. Remember the movie The Big Short? It's a very hit movie. And watch this. This will be a good movie to watch. Okay. But there are a lot of things that you need to understand. You will get to understand in relation to the market when you watch this movie. Okay. So do watch it. Comfortable till here? Okay, that is point number 17. Now we go to point number 18. Now this is the review of reports. So which all reports should the auditor review? So I'm writing here the main heading called review of reports. If you are using my textbook, this diagram will be there somewhere at the end of bank audit chapter. Okay. So what is the review of reports? Let's do it one by one. Let's see this. So auditor should check which reports while doing the audit. So you should keep in touch with the which reports which will indicate that there is some issue. First, they have said previous auditors report. Previous auditors report. Second, they have said internal auditors report. Internal auditors report. Third, they have said, look here, charge handing over report. Charge handing over report. When the old manager resigns, leaves, and the new manager takes over, the old manager will give something called as handing over report to the new manager, basically saying that, see, these are the current situations in the bank and I'm leaving you at this stage. Now from here onwards you handle. That is called charge handing over report. In that also sometimes the auditor will may find some risk or issues which have been reported, because see, this person when he's leaving, he has no problem to mention any big issues that are there in the bank. So sometimes this person can reveal a lot of things and then leave. So that is why the auditor is checking the charge handing over report. Simple. Next, you have here something called as, so there are three reports here. Look here, see, that your previous audit report, internal auditor's report, and charge handing over report. The short form of that comes to chore. So I've just given chore there. That is so that is easy for you to remember. Charge handing over report. Okay, nothing related to theft and all. Old manager giving the report to the new manager is called a charge handing over report. Okay. Next, you have the bank's internal report. Banks, any bank which is giving its internal report on any matter, internal report. Bank, if they have any kind of fraud or major issue has happened in the bank, they will release something called as internal inspection report, which the auditor can check. Okay, internal inspection report. So your previous auditor's report is first, internal auditor's report is second, charge handing over report is third, bank's internal report is fourth, bank's internal inspection report is five. Then after that, you have RBI's inspection report. RBI's inspection report, which is 6. Simple. Finally, when the bank gives loan to a borrower, so this person is the borrower, and this borrower gives any kind of security to the bank, the bank will release one more report regarding whether the security is intact, whether value of security is there or not. There should be no erosion in the value of security. Remember erosion. So for that, the bank will release one more report called a verification of security report, whether security value is there in place. So any loan that the bank has given, whether security value is there in place or not, they'll give a report on that. And that is your seventh one. That is your seventh one. So tell me the points here. Review of report. What all reports will the auditor review? That is your previous audit report, internal auditor's report, charge handing over report, then your bank's internal report, bank's internal inspection report, RBI's inspection report, and verification of security report. Verification of security report. Simple. Okay. Let's read this answer. See this. Reliance on or review of other reports, the auditor should take into account the adverse comments, the negative comments, if any, on advances means loans appearing in the following. Which report? Previous audit report, concurrent or internal auditor's report. If the bank has appointed a concurrent auditor, then his report or internal auditor's report. Manager's charge handing over report. When the incumbent is changed. Incumbent means when the person who is currently the manager, he is leaving and the new person you are going to give. So the person who is currently the manager is called incumbent. Okay. Next is any other internal reports, especially relating to particular account. That is called internal reports of the bank. Then you have the latest inspection reports of the bank official. Then Reserve Bank latest inspection report. Then you have the report on verification of security. Verification of security. The above report should be reviewed in detail. That is what they are trying to say. Or the thing should be reviewed in detail. And the statutory central auditor. Remember the head office auditor, statutory central auditor. Ghosh Jilani, in that we had seen statutory central auditor has to give reports other than the main reports, correct? So you have this statutory central auditors must review the annual financial inspection report of RBI relating to the bank and ensure that the variations in provisions, etc., reported by the bank have been properly considered by the bank's management. Bank's management. Simple, clear? That is your point number 18. This was circled, important area. Okay, this one, that is a review of reports. Now with that we go to the base diagram and then we just see what all have we just finished. So we have done from 10 to 18 now. So that is your materiality, going concern, fraud in fraud. As per the anti-money laundering guidelines of RBI, we have to, the auditor should check whether the bank is doing the KYC, know your customers properly or not. Your specific risk, outsourced risk, when the work is given to others and there can be risk associated to that is called outsourced risk. Response to risk is your further audit procedures. Stress testing, whether bank system is ready to take what level of workload they are ready to take, that is stress testing. Then you have Basel 3 framework, okay, that is your subprime crisis in USA example I gave. And finally, review of reports, we saw the diagram, okay. That completes your conduct of audit of banks. Simple answer. Ensure that you are doing in that exact order in which I took you through and you will be good to go. Don't worry. Okay, take care. See you. Bye.